Hey everyone, B Kevin here. So Deep Effing Value has published his testimony in terms of what he expects to say at Congress tomorrow. He's going to get grilled in questions afterwards, but let's take an early look to see what is his testimony going to look like. We've got it right here. So let's pull this up and go through it one by one. Here it is. So, it's kind of intense. I want to see this. Okay. Thank you, Chairman Waters, Ranking Member McHenry, and members of the committee. Before I go further, I want to be clear on what I am and am not. I am not a hedge fund. I do not have clients. I do not provide personalized investment advice for fees or commission. Big thing right there. That is a legally put in there. Lawyers have drafted this, obviously, ever since Deep Effing Value, also known as Roaring Kitty, also known as Keith Patrick Gill, ever since he went dark on Reddit. I said the reason he went dark is because his attorneys are saying, shut the F up, you're digging yourself into a hole, stop saying diamond hands, shut up, get off Wall Street bets, do not lead people into potentially, diamond handing this and then potentially losing more money because then you're just going to get sued more. Get off the platform. If you want to sell and take your gains, do it, but that's on you. Just shut your freaking mouth. I guarantee you that's what the attorneys told him. So, so here's his defense. I am an individual investor. It's very important how he's clearing this out because what he's saying here, by the way, will be used in other lawsuits in the future. He's already being sued for potentially manipulating the market is a lawsuit he's dealing with. My investment in GameStop and my posts on social media were entirely my own. In other words, he wasn't compensated by GameStop or whatever to run this up, which is another potential legal argument, right? Then, I did not solicit anyone to buy or sell the stock for my own profit. I didn't pump it up. I did not belong to any groups trying to create movements in the stock price. That potentially could get debated because you're part of Wall Street Bets, but the argument here he's making is trying to create movements in the stock price. This is important because it's when you collude with others that you create a pump and dump. This is we're 3 sentences in. And the legalese that's coming through here is a very strong defense so far. I've never had a financial relationship with any hedge fund. I had no information about GameStop except what was public. It's no secret information. Nobody told me anything. I'm not an insider is what he's saying. All legally important things. I did not know any people inside the company. I never spoke to an insider. See, look at that. Literally, the next slide just reiterates that. He's not an insider is what they're trying to say. This is a legal defense is what this is. As an individual investor, I use publicly available information to study the market and value of specific companies. I consider a complex array of factors and track hundreds of stocks. It wasn't just GameStop, it's hundreds. All in search of market inefficiencies. Like many people, sometimes I post on social media my thoughts and analysis about individual stocks and whether they are correctly valued. Very strong statement here because it's like, hey, look, a lot of people do this. Look at that guy, Meet Kevin. He talks about stocks every day. I did that with GameStop. I believe the company was dramatically undervalued by the market. The prevailing analysis about GameStop's impending doom was simply wrong. Okay. A little of my background. I grew up in Brockton, Massachusetts. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated Stonehill College in 2009. Amid the Great Recession and without a long-term job, my first post-college job was in operations at WB Mason, an office supplies company headquartered in my hometown of Brockton. Between 2010 and 2024, I worked for a family friend at a startup company in New Hampshire, trying to build a software program that would help investors analyze stocks and offer related research. Oh, so Deep Effing Value tried to do some research. We also tried to start an investment firm, which dissolved, not long after it was created. My salary never exceeded $40,000. Of course not, because you don't want to pay yourself more at your S corporation, because then you'll be paying more taxes. Nobody's salary exceeds $40K in an S corp. Anyway, that's not necessary. That's not true. I'm just making that up. But anyway, But I did learn something about investing. I learned how to do the tedious work of digging through a company's financials and focusing on its real long-term value, not prevailing market sentiments or headlines. I married my wife Carolyn in 2016, and I found a job working operations and compliance at Lex Shares. I left that job in March of 2017, and for the next 2 years, I was effectively without a job. During that time, I began actively analyzing a wide variety of stocks to try to keep and increase our limited savings. It was both a way to make money and an interest that I pursued passionately while I lacked a job. In April 2019, I accepted a marketing and financial education job at Mass Mutual. Carolyn and I were both happy about our prospects. I never made a salary over $100,000 a year before. Ooh, so I was making over $100K a year now. And I was thrilled just to be working and have benefits again. My title was Financial Wellness Education. Okay. My job was to help develop financial education classes that advisors could present to prospective clients. I never sold securities, and I was never, he was not a financial advisor. Continued analyzing stocks in my own time and investing my family's funds. In early June of 2019, the price of GameStop stock declined on worse than expected earnings, and it began trading at a deep discount below what I thought was its fair value. I was aware from public reports, public keyword, that a well-known investor, Michael Burry, was interested in GameStop. Because I thought the stock was undervalued, I purchased call options on June 7th, 2019. I increased my position throughout much of 2019 and 20 because as I continued to analyze the company and its prospects, I became increasingly confident that the share price was indeed deeply undervalued. Two important factors, based entirely off publicly information, gave me and many others confidence that GameStop was undervalued. First, the market was underestimating the prospects of GameStop's legacy business and overestimating its likelihood of going bankrupt. GameStop, the only major retailer dedicated to gaming, has over 60 million members in its loyalty program and continues to maintain a sizable market share within the gaming industry. I have to say, I'm pretty sure I'm in that loyalty program, and I haven't been to a GameStop in like 10 years. Anyway, moving on. Its legacy business, comprised primarily of selling physical video games and related equipment within their stores, was likely to generate meaningful cash flow following the release of new gaming consoles in late 2020. True, one-time event, but I agree. I grew up playing video games and shopping at GameStop, and I look forward to buying a new console at GameStop. In other words, nostalgia, right? This is a brilliantly written letter so far. And this is going to be the congressional testimony tomorrow. I knew the company had an opportunity to reinvigorate this business by improving customer service for their gamers, upgrading its online presence, and offering complementary product lines such as PC gaming and accessories. Second, I believed and continue to believe that GameStop has the potential to reinvent itself as the ultimate destination for gamers with the thriving $200 billion gaming industry. The new console cycle provides GameStop a unique opportunity to pivot from a traditional brick and mortar mindset to a technology-driven business that excels in gaming products. I mean, he's going through this whole thesis here on why he believes GameStop is so great. And obviously it's put together by him and his attorneys, but it's being done as a way to say, we weren't pumping and dumping. Look at how much we believe in this company. I went to GameStop as a kid and I still go. By embracing the digital economy, GameStop can pursue new revenue streams, including larger gaming catalogs. Gaming catalogs. Do you remember strategy guides? Man, those were the days, getting a new strategy guide. Digital content and community experiences, online trade-ins, streaming services, and esports. Competitive gaming, I agree that. I like GameStop. Let's see here. So while I may be the only panelist here today, who had, look, he said had. While I may be the only panelist here today who had faith in GameStop, I'm telling you, man, this guy's sold. This guy's out. GameStop. Yeah, I see the comments here. Totally, he's got videos about this, and he talks about all of this. So it's totally true. I'm just saying the way they're talking to Congress is providing this information. So I was hardly the only person who advocated the points or ones like them. Investors, including Chewy co-founder Ryan Cohen, whose purchase of GameStop shares and advocacy of GameStop, of the GameStop board, helped positively affect the share price in late 2020, publicly expressed similar views. I want to pause on the note that the investment I made was risky, but I was confident in my analysis and I was willing to accept the loss if I was proven wrong. My timing was far from perfect, and many of the option contracts I purchased expired worthless because GameStop's price remained depressed for longer than I expected. Here we go, moving on. I've been asked why I decided to share my investment ideas on social media. My investment skill had reached a level where I felt sharing them publicly could help others. I also thought by sharing my own ideas and accepting critiques, I would be able to identify holes in my analysis. Smoking hot argument. That is a really good argument. Such a good argument. Folks, when I post a video on YouTube and I'm like, y'all, this is what I think about Bitcoin or Tesla or whatever, like, and I'm really excited about it. Yeah, I hear about it in the comments if I say something wrong. It's definitely true. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and critique investment ideas, while individual investors have not had that advantage. Social media platforms like YouTube, Twitter, Wall Street Bets on Reddit are leveling the playing field. Oh, such a strong argument for the little guy. Yes! Come on, folks. Money arguments here. Yes! Good job, attorney. While in the year of quarantines and COVID, engaging with other investors on social media was a safe way to socialize. I'm not out there drinking and doing drugs. I'm looking at financial statements and sharing my ideas. That's brilliant. Such a good argument. This is good. This is gold. We had fun. Yes, we did. Here we go, folks. We got the diamond hand man right here. Boom! Diamond hands. Wall Street Bets. Okay. The idea that I use social media to promote GameStop stock to unwitting investors is preposterous. I was abundantly clear that my channel was for educational purposes only. Remember, folks, I'm just a dude on YouTube. This is all just for entertainment and educational purpose. Oh, he said educational. We usually say entertainment purposes only. Ooh. Educational purposes only. And that my aggressive style of investing was unlikely to be suitable for most folks checking out my channel. Whether other individual investors bought the stock was irrelevant to my thesis. My focus was on the fundamentals of the business. It's worth noting that after 5 months of streaming, my final stream of 2020 topped out at just 96 concurrent viewers, with an average view duration of 25 minutes. So before he went viral, basically, he had 96 viewers at one time. On Christmas morning, I had only 529 subscribers on YouTube, 550 followers on Twitter. That's blown up. These numbers are tiny. There were rarely more than a few dozen folks on a stream at any night. The reality was people didn't really care about boring, repetitive analysis of GameStop and other stocks, and that was fine. For those of us who did care, the stream provided an outlet for refining our fundamental-based thesis. We were able to analyze events in real time and keep each other honest. Ultimately, my GameStop investment was a success. But the thing is, I felt that way in December, far before the peak, when the stock was at $20 a share. I was so happy to visit my family in Brockton for the holidays and give them the great news: we were millionaires. That money will go... That money... Dude, this guy sold! You know he sold! It's all right. We've been saying he sold for a long time. We don't have the guarantee, but that's the expectation. That money will go such a long way for my family. We had an incredibly difficult 2020. In addition to dealing with COVID, we lost my sister Sarah unexpectedly in June. God, oh, that's terrible. That's terrible. That sucks. It brought me tremendous joy to share good news with my family for a change. I'm grateful to be able to give back to my community and support my family. Most of all, my wife Carolyn, who has stuck with me through very tough times. Oh, it's so good. Jeez. As for what happened in January, others will have to explain it. Oh, so smart. Woo! Threshold lists, order flow, halting purchasing, according to the media, all had a material impact on GameStop stock in January. Here's the thing. I've had a bit of experience, and even I barely understand these matters. It's alarming how little we know about the inner workings of the market. I am thankful this committee is examining what happened. I believe an analysis of GameStop's recent price action must start with a discussion of the exorbitant short interest in the stock. That's right, man. Turn this around on those short sellers, as well as an investigation into any potentially manipulative shorting practices and brokers' reported failures to timely deliver shares and Oh! Settle trades. Oh! As far as what I expect moving forward, GameStop's stock price may have gotten a little bit ahead of itself last month, but I'm as bullish as I've ever been on a potential turnaround. In short, I like the stock. Notice he doesn't say he's still holding the stock. And what's stunning is the fact that as far as I can tell, the market remains oblivious to GameStop's unique opportunity within the gaming industry. Boom! What a letter. What a letter, folks. That's powerful. So that is Deep F in Value, also known as Roaring Kitty, with a really powerful and emotional letter here. Really incredible. So let me know what you think about this particular breakdown or the letter and the contents of it. Obviously, I'll be streaming this live tomorrow, so we'll get to hear him read his testimony, but also go into Q&A live tomorrow at 9 a.m. Pacific time. So stay tuned for that.